Good morning, traders. Thanks for joining me this morning. It is 8 a.m. Chicago time on Monday, the 29th of September, 2025. This is episode number 2692. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. A quick mic check would help. I am actually remote today from the Toronto, Canada area. Just a quick mic check would help me out. Let me know if my headset's working perfectly or not, or if you're hearing loud news feed or background noise or whatever. Okay, so I'm assuming it is. Let me know. Let's jump right into the convergent trading pre-market summary sheet. The market's been trending, the indices have been trending up since the open. This was really something that while I was doing my homework yesterday and posting it on Convergent Trading's Discord, I had commented that there's just a very high probability that this is likely to drift up, and that's what it did. And why? We'll cover that today. Again, the goal is not for me to say, "Hey, look at me, I got this right." The goal is to say that the setup was there, the context was there, and the market's following through. So it's trading as expected. That's the point of this. So mild risk on today. We're running back up over the 6,700 in the S&Ps, over the 24,900 in the Nasdaq. The crude tested 66 and has fallen off, and the Russell's also trending up and is getting back up over the 2460. So overall, pretty bullish. You can see there the relative range R ran is quite high. The relative volume is in line that in this moment at 8 a.m. Chicago time versus 8 a.m. Chicago time of the last 20 sessions average. The volume is in line for the S&P, is in line for the Nasdaq, but is way off on Russell and the Dow. You can see there 74% and 78% of the average for this time of day over the last 20 sessions. The range is pretty good on the Nasdaq and the S&P, but it's not so aggressive in the Russell and the Dow. Russell and Dow are basically in line this morning. Thank you all for the feedback. Appreciated. The DAX Euro stocks holding steady. Really not much of a change. The Euro stocks basically unchanged from Friday's session, and the DAX is slightly up. Decent volume and okay range. You could see crude down 2%. 2%, really a pretty cascading fall in crude overnight. 100% of the range traded, 95% of the relative volume, and gold is holding steady above 3,800 gold. What a product. So that's where we stand overall. The S&P, we have a trending profile in the S&P. 145,000 contracts and volume, pretty decent volume this morning. The mode of volume at this time or for the overnight session over the last year, which is 252 days, is listed there under the ES overnight statistics, and it shows 130,000 contracts. By the time the market opens this morning, we're already at 145,000, so a little bit higher than the mode, but well within the one standard deviation, so the volume is relatively normal. The inventory is 100% long. What does that mean? That means 100% of the volume that has occurred overnight has taken place above the prior close, so the inventory is long 100%, and the range is pretty good at 39.25% versus the mode of 29 points. What are the themes and economic events? Let me start with the calendar. What I do here on Mondays is I look at the top tier numbers, and look at them for the week to see what is likely to drive us. So today we have China's MBS manufacturing PMI at 9 p.m. Eastern. We have, and that's pretty much it. At 9:45, we have this rating dog manufacturing PMI, which frankly I've never heard of before. Expecting 50.3 there. Tomorrow at 12:30 a.m. Eastern U.S. time, we have Australia's Reserve Bank interest rate decision expected to hold steady at 3.6%. We get the inflation rate out of France, Italy, Germany. Uh, those happen overnight. Germany's inflation rate, very important. This is the prelim, comes out at 8 a.m. Eastern, 7 Central, 2.3% expected. And then at 10 a.m. tomorrow, we get the U.S. JOLTS job openings. Quite an important number as well. 7.1 million job openings. If you remember, at some point it was at 15 million job openings, unfilled job openings in the United States. So it shrunk quite a bit there. And then in the evening tomorrow night, we get Japan's Tankan Large Manufacturers Index. Wednesday, we get the inflation rate flash out of the Eurozone. We get ISM manufacturing out of the US. We get balance of trade out of Australia. And Thursday, we get consumer confidence. And then finally Friday, the big number, the non-farm payrolls and unemployment in the U.S. at 8:30 Eastern, expecting 50K as of right now. The unemployment rate is expected at 4.3%. So on top of that, we have this problem, which is a stalemate between Trump and Congress with regards to funding of the government. Trump announced this morning that if they don't come to make a deal today, they're supposed to meet at 3 p.m. Eastern, I think. If they don't come to make a deal today, then the government will shut down. So that's going to be looming today. The market's rallying. But overall, we have, the last day of the month tomorrow and a potential government shutdown. The resistance to the budget, to increasing the ceiling, is actually coming from both Democrats and Republicans currently. U.S. President Trump is set to meet congressional leaders 3 p.m. Eastern. Fed's hammock says inflation is too high and trend is in the wrong direction. Tariffs are a big part of inflation story. U.S. President Trump posted an image of himself firing Fed Chair Powell over the weekend. This is the sort of stuff that just makes me roll my eyes. Lots of reality TV nonsense from this administration. UK reportedly will offer to pay more for drugs in a bid to placate U.S. President Trump and pharmaceutical groups. South Korea rejected a U.S. request for $350 billion in cash under a tariff reduction deal, according to a senior official. EA announces agreement to be acquired by PIF. It's going private. Silver Lake and Affinity Partners for $55 billion. So they're going off the market. EA, the largest gaming company in the world. And that's that. So let's take a look at the markets themselves. Okay, so let's start with the S&P here. We're going to do the market profile chart. Again, as discussed on Friday, we covered this a fair bit. Very clear excess at the low and a return. We had a neutral day on Thursday. We had a range extension up, range extension down. Later in the session, it came back to close at the point of control and hold steady. And what we did on Friday, which is what was expected and outlined in Friday's video, is we came back in. We opened just, the expectations to open just outside of the high in the gap zone. Remember, there's a gap zone here that we left behind in the gap zone or just below to test back in. And what it did is it tested prior settle and the point of control. It is pushing It is continuing to push higher, and you can see we shifted the point of control to the upper end of the range. And so what we have done on Friday is we recaptured the balance of the drop day. Remember, this day it opened right in the singles and sold right off and held steady on a B-shaped profile. And what we did on Friday is we held this. And what this does is it sets up a base. What we have then in aggregate is an excess low against the Fed's excess low. Remember, the FOMC meeting left us with an excess low. So what this is doing is it's telling us the market's rejecting anything under 66.30. And so we ended up Friday, however, holding the entire range inside of the initial bounce. This is very unusual. This is as you might know, the IB stat. This is a historical probability of about 2% that would happen, but we ended up finishing above VWAP and everything else and holding steady in this consolidation. So we very, very clearly rejected these lower prices again. And so we're left with the idea that we've regained this upper area right here. And so the expectation is it's very likely to continue to drift up. And that's what we had, right? So it's even more prominent in the NQ, by the way. If we look at the NQ really quick, we have a bit of an excess here. It pushes up, comes down, and the NQ never went neutral on Thursday and finished right up in this balance area. And then on Friday, it ended up pushing down and then extending the IB by just a handful of points and then creating what is a very clear look at that weak high. Look at how poor this high is with the point of control at the upper end of the range. Okay, and a very weak high up here. And so what this sets up is we're starting to trigger one time framing up. We have a market that is holding the upper end of the range. We have volume that is built on the upper distribution. We have two distributions on Friday in the NQ and a very weak high. This really sets up a condition where the market has basically run out of time on Friday to further explore and extend this profile up till we find sellers where we would expect a taper. So the automatic expectation is for it to continue higher, and that's exactly what we got, right? So you could see the narrative kind of playing out. This is my intraday chart. The zones you see here basically split battle zones. You could see on Friday it went right up to the upper battle zone here and back down. I don't move these levels, and you could see Friday just traded the 6700 to 6655 ish, 6660, and then it came right back and held at the high in this like rising flag, kind of a rising wedge type of formation. And what we've done since, so that was Friday, and what we've done since is held this same trend. This is like a buy program that's just continuing to operate here, pushing right through the balance and imbalance areas or balance and imbalance limits back into this upper balance zone right here. Overall, we have a trend type profile. We have a weak high. You could see the high is relatively weak in the overnight session. We could see also that we have separation between the overnight point of control, the DGPs, day generated prices. That's what DGP stands for. That's your mid VWAP versus the overnight. So we have a bit of a dislocation in price versus the VWAP and mid, but then you have price stuck at the overnight point of control, and it has built a nice big fat distribution here. So we still don't have a P-shape, a confirmed P-shape yet. First of all, because we have multiple distributions on the way up. This is a guy's nose right here. See that? Big nose. Multiple distributions up here. We have the point of control shifting to the upper end of the range. This is likely to just keep squeezing. So I'm looking for a push into 67.50, which is where the point of control is up here. So what did we do before the sell-off, before this rounded top? Look at this amazing zipper zone. This is a half-hour chart, folks. Amazing zipper zone on the new all-time highs before dropping, and that becomes your key test target. There's quite a bit to get through up there, so the expectation today is it's likely to move into the 67.45 area, consolidate in here, and then come right back. That would be my primary expectation. It would have to do it for me to be able to see a setup to trade, but the very likely scenario is it's most likely to continue higher. One thing to note here, we're opening in a gap, pretty wide gap. Gap rules apply here. So what happens with gaps? Gaps either get accepted and we shift the trade higher, or gaps get rejected and then we get responsive selling. Now, the probability of this becoming responsive all the way back into the 6,700 is not all that great. There's quite a bit of distance here to cover. 30 points to the prior range high. I think the probability for that's in the 4% region the last time I checked. Historical probability, that is. The probability of it tagging it today is how much? What's the probability for today? Yes, it's 50%. It's always 50%. So today we're watching very carefully. Where does it open? How does it treat a response back into the 6720 and below? And how do the buyers come in? Do they still have an appetite? And, are the systems kicking in on the open to catch the next run to the all-time high? So that's going to be very, very important to look at this morning. Okay, so primary scenario, open auction out of range, base, lift to 67.45, try to squeeze to 67.50, run into some overhead and not be able to extend very far. We still do have this government shutdown looming and stuff like that. Secondary scenario, it runs up as laggards come in and squeeze, and then we get this strong impulse down back through, we clear 6720, and then we start to make our way back to 6700, 6704. That's the secondary scenario. That's the better scenario for day trading, but we'll see how that plays out. Looking at crude, so let's take a minute and look at crude here. Okay, so here's crude on the market profile chart. Crude very clearly in a range, battling down here, 61 to 64. Basically, I'm just rounding numbers. Really nice double bottom here at 64.06, and that's what it's tackling right now. 64.06 is kind of the last frontier. And so what it's done is it's skipped upwards, pulled back. We have a tweezer top. We have a push. This is a half-hour chart. Wow, I'm really terrible drawing today with this mouse. This is my travel mouse. Push up, tweezer top, come back, right shoulder, and then we have a skewed neckline on the shoulder and it releases to the downside. We have a secondary support zone here that's being tested right now. I'm not trying to give you the finger, so no offense here, but what it's done is it's opened. See how it opened? It opened right at the high and it's pushing down. So you take your buy card off the table for crude and you're only looking for, or I'm only looking for neutral to short side setups and mostly continuation setups. So any pullback looking for a continuation down and overall looking for it to come down into the 63 area as the next target. So that's crude for you. Really nice structure in crude, like just an absolute beauty there. You could see it here in this chart that this red zone is really important support. If buyers are going to defend, they would be defending right in this area, and it doesn't look like it looks like they're fighting it out with the last low here. But as soon as they give that up, I'm looking for 63 as a key target. So crude has a fair bit of overhead at 65 now, so it's skewing to the short side. Does that make sense to you? Okay, so that's all I have for you. As far as the Nasdaq, like I keep telling you guys, the Nasdaq really it's a little bit more ahead than the S&P, but the Nasdaq just follows, the same lately, the same scenarios exist in the Nasdaq as we cover in the S&P. And it still has a weak high, and it still looks like it's likely to push the overnight high, and the Nasdaq has that same kind of zipper formation. Let's draw the zone here. Zipper formation in here is a key target. So you could see the neckline of it right there. This is the 2975, 24,975 area basically, before it starts to push into this high volume node. If it pushes into that high volume node, it's likely to falter a little bit, but overall you're likely to get a new all-time high in the NQ. I mean, it's just so obvious the way this thing's set up. NQ, beautiful excesses at the low, and just a very well-structured trade in my opinion. You just have to use wider stops and hang in there. Okay? I'll leave you with that. Good luck. Don't forget to subscribe to the channel. You can do that by going to ft71.com/YouTube, all lowercase. Subscribe to the channel, like the video, set your alerts so that other traders can find it. I'll talk to you tomorrow morning, actually. I'm traveling back tomorrow, and I need to help out with the kids on Wednesday morning. I haven't seen them for a few days, so Wednesday I won't do a trader bite, but instead I'll do one tomorrow, and we'll review what we talked about today. Okay? Good luck.